Hi there, everybody, and welcome to today's AOP Industry Deep Dive webinar. It's a play on our AOP Live webinars where we're going to dig deep into a specific topic and a specific industry. Today, we're focusing on third-party risk management and financial services. So I want to thank you all for joining us. As always, if this isn't your first AOP webinar, if it is, then we're going to keep this all about the conversation. So no slides as we go throughout. It's about questions that we have for our panelists. And of course, if you have anything that you're interested in posing to our guests, feel free to pop them in the question box that is underneath this webinar as you're watching it. Keeping an eye on the questions, but also helping me through the conversation is my partner here at Art of Procurement, Kelly Barner. So Kelly, welcome today and thanks for joining me.
Absolutely, Phil. We're looking forward to this discussion.
So the topic itself is called, the webinar itself is prioritizing cost reduction and third-party risk management in financial services. So we're going to be talking about operationalizing risk management, regulatory compliance, and doing that while balancing costs. This is a topic for me that I have some experience in as a practitioner too, so I'm always willing to put in some of my own thoughts and opinions as we go through the conversation, so I'll be sure to do that, I'm sure. But we're going to be joined by two different guests in a moment. We're going to be joined by Andrew Thomas, who's Solutions Consultant at Ivalua, and Alanna Eltsin, who's Managing Director in Consulting at KPMG. So with that being said, let's bring Andrew and Alanna onto the webinar. And hi there, Alanna. Hi, Andrew. Thanks for joining us today.
Hi, good morning.
Morning. And so the first question I have, I'm going to pose this to both of you. Alanna, I'm going to ask this to you first. If you could just tell us a little bit about your background as it connects to today's focus.
Yes, absolutely. Thank you, Phil. So I have been focused on working with financial services clients in establishing procurement functions and third-party risk management programs for the majority of my career. And I've been particularly focused on third-party risk management for about a decade, ever since there's been an increased regulatory focus in that space. So first, it was about kind of helping clients establish these programs and make sure that they're compliant. And then it's evolved, as the industry has matured, it's evolved to actually helping to optimize these programs, build better processes, build better target operating models, and help support all of that with technology.
Interesting. So the beginning was about putting them in place in the first place, where a lot of these programs didn't exist. Now it's as much about optimizing what was put in place back, 10 years ago, as you say.
Exactly.
Andrew, from your perspective, what kind of exposure and experience do you have in third-party risk management?
Sure. Well, as you noted earlier, I'm a solutions consultant for Ivalua. I'm based in Toronto, Ontario, and I have over 10 years of industry experience, specifically in financial services. As a solutions consultant at Ivalua, my focus is on supporting our current and prospective clients as wherever they happen to be, I suppose, on their journey to digitize and modernize both their source-to-pay processes as well as their embedding their third-party risk processes within that. From an industry perspective, I've held a variety of roles at a large Canadian bank for over 10 years in either accounts payable, procurement operations, or procurement, folks who all have a vested interest in the third-party risk management process. So I'm looking forward to bringing a bit of a technical slant as well as a organizational change management slant to this conversation.
Well, we know that technology is at the heart of really implementing leading third-party risk management programs. So I know we're going to dig into that a little bit later with some advice for anybody who's watching. But let me start right at the beginning. And Alanna, I'm going to pose this to you. We always like to kind of start with some definitions, so we all know that we're talking about the same kind of thing. As you think about third-party risk management, what's the objective of a third-party risk management program? And what are programs like this trying to protect the business against?
Sure. Quite simply, it's really to assess, understand, and protect organizations from the risk that is introduced by third-party relationships, such as suppliers, and doing this in a way that is compliant with regulatory guidance while enabling the business to focus on its core functions. So it's really, quite a bit about balance. Yep. And it's about kind of considering the entire supplier life cycle in the program from beginning to end.
And you mentioned third parties being more than just suppliers. I just want to just dig into that a little bit more. What other types of third parties usually fall under the remit of a third party risk management program?
Well, it really can be any relationship that a financial institution has. So it could be suppliers, but it could be brokers, it could be counterparties, it could be other banks that they're working with. So it's really any party they enter into a relationship with. Procurement tends to focus more on suppliers, but the broader programs have to consider all relationships.
And Andrew, is it possible, because we talk about third-party risk management thinking it's about protecting all risks, is it possible to protect against all risks? Or do you find that it's more around prioritization of risks?
Sure. I think it's a bit of a loaded question. Certainly, I think that programs endeavor to anticipate and protect against all risks, but the reality is that that's not entirely possible. And so what programs tend to do, ones that are high functioning and mature, tend to take a look at the risk appetite of a given business partner or an enterprise and prioritize the risks that are the most important to their particular business. In FinServ, I would say, and Alanna, certainly, gut check me on this, but, I see our FinServ clients largely focusing on supply chain risk, regulatory risk, and of course, information security risk as sort of key priority areas, key to protecting.
Yeah. Now, Andrew, given that those are the key areas of focus, and I love the fact that you called out specifically financial services, what does procurement's active role tend to be? So if all of these things are being monitored, their objectives being set, when we convert that into action, where are procurement's activities typically focused?
Sure. I think Alanna and I can probably tag team this one. And I think maybe it's really important to call out, we're certainly talking about third-party risk here. And you sort of, Kelly, in some ways phrase the question as if procurement is ultimately the owner or steward of third-party risk for an organization. And so as we look across financial services, whether it's insurance or banking, that's not always the case, that procurement ultimately holds the baton here for third-party risk. Perhaps that, and I don't want to make up a number, but, certainly in, a third of the cases that may be the case. But procurement from a third-party perspective often needs to partner with other key stakeholders in an organization, especially as you move from a mid to sort of enterprise side client to organizations like legal or, a dedicated risk and compliance function, sometimes even IT. And so I'll toss the baton over to Alanna, but I think what we're going to find is that the role of procurement has changed a lot in the last 10 to 20 years. If you were to look at a job description today versus 20 years ago, the soft skills and background, procurement folks are being asked to do more, sometimes with less time and less people. But they, in some cases, act a lot more of a facilitator of the process, acting as a conduit between the business and the supplier and all of the different spokes of the risk process within an organization. Alanna, do you sort of agree with that?
Absolutely. Procurement is in a unique position to kind of be at the forefront of a request or any time a supplier relationship might be contemplated. And as such, they kind of play that role throughout the process where they can help coordinate and facilitate. Third-party risk management can be quite complex for the business. And sometimes they really don't know how to navigate that process. Procurement can help bring everything together, standardize the process, ensure there's coordination among legal, the risk partners, suppliers, the business, and all the other parties involved. And as Andrew said, that does require some new skills that, they haven't had to think about before. Things beyond, sourcing and cost saving and kind of driving operational execution, and more around, things like project management, things like understanding risks and being able to explain them to the business and really kind of serve as that quarterback in the process oftentimes.
Well, it's interesting you talk about the skills shifts. And obviously, we know that technology and visibility play a role in this as well. Alanna, just as a follow-up to what you were sharing, very, very generalized, because this is so hard. Can you talk a little bit about what good looks like in terms of procurement's role in third-party risk management? Maybe give us a sense of what might be some table stakes capabilities and levels of involvement depending on how risk management is owned in the company versus what some indications might be that your particular team or your particular company's needs are a little bit more mature and sophisticated.
Yeah, absolutely. I think, from a table stakes perspective, most companies by now have a third-party risk management program because it's been necessary, because it's required by the regulators. And, that usually means that there's some kind of risk assessment process in place with some kind of risk assessment questionnaire. There's some kind of, due diligence process. We know what are the risks that we're trying to track and who our risk partners are. We have a process to onboard suppliers. We have a process to collect information. There's some basic reporting in place. And, hopefully the business has a sense of what to do next, or someone can help them. Someone like procurement can help them. Yeah. So that's sort of something that you kind of have to have. Beyond that, what we see more mature organizations do is actually have a much more integrated process. So they're looking at integrating their entire source to pay process with third-party risk management. They're not parallel, they're working in tandem. There are connection points and handoffs and communication points across the process. There are standards across the various risk groups and how individual risk assessments are conducted. There's a coordinated effort. There's visibility into the process. So the business knows what's coming, knows what to expect based on the complexity of the ask, and they're able to kind of navigate that process without major surprises along the way. There's some kind of technology that is supporting all of this, providing that visibility, providing reporting, allowing organizations to actually become more proactive instead of simply collecting information, actually be able to act on, certain trends that they're seeing.
Sure. Now, maybe one more follow-up question on this, and I'll stay with you, Alanna, and then Andrew, I'll have you chime in and add your thoughts as well. We've talked about what good looks like, what basic looks like versus something more mature. But given all the complexity we've seen over the last few years, we know it's also very possible that there can be risks lurking in a company's third-party risk management program. So what might be some signs that either procurement or simply the executive team should be on the lookout for that maybe it's time for the program to go through an adjustment, and whether that's upskilling, whether it's process realignment, you talked about that a little bit, as well as the technology that's in place. Alanna, any signs that tend to be or should be red flags that it's time to re-examine the program?
Yeah, typically where we see organizations struggle, there's some obvious places, right? There are, regulatory issues. There are issues that need to be dealt with because the regulators required you to do so. So that's kind of the obvious one that obviously happens. And then there could be things like higher number of incidents, actual results of the program, right? Are they being tracked and managed and understood, or is this program not actually yielding the end results we're looking for? But there are also more subtle challenges that really are symptoms that something is not working well. And it's things like increased cycle times, right? So a lot of times the business will raise concerns about the fact that even the simplest requests take, a very long time to process. Somebody alluded to that earlier as well, right? It's things like there are too many handoffs and nobody knows who is on first, right? So where we actually in the process, the business doesn't have visibility, doesn't understand what's coming up. Yeah. There's lack of clarity in roles and responsibilities between the different parties. Whose job is it to advance the process? So those are the kinds of things that we see quite often. And it's usually impacting both the business because it's slowing down their ability to do their core jobs because they're getting slowed down by the process. And it's usually quite difficult for organizations like procurement because everything is so manual that the organizations start to balloon, and that becomes very costly.
Yeah. Andrew, anything that you wanted to add in there? Maybe frustration that procurement starts to feel, signs that other people, or especially decision makers, start to realize that maybe the risk management program needs an adjustment?
Sure. Well, I think Alanna, hit on a lot of them, but I do want to come back to this notion of symptoms. And I think if your third-party risk teams were to conduct a voice of the customer with the business and with procurement, you're going to hear a lot of the things that Alanna mentioned. Duplication of effort. Things are very, very slow. I have a simple request. Why does it take the same amount of time to do that versus this enterprise master agreement? And what you will uncover is frustration from your end users as a broader symptom, typically of a third-party risk program, as Alanna noted, that was stood up to meet all of your regulatory requirements, but did not adjust or did not evolve over time. The net result is that you're over clubbing all of your due diligence. Everything gets the same treatment, and you lose buy-in from your business partners. Procurement starts to see this process not as a value add, not as something that's protecting the business, but an impediment to some of the other procurement objectives like savings and speed to market. So conducting regular voices of the customer, or just having regular touch points with your teams internally, is critical to assessing. And of course, as Alanna noted, if you are doing a huge amount of due diligence, but your net number of incidents for critical or high risk suppliers is not going down, it's time to reevaluate. So I think, from the outside looking in, that seems simple, but when you're living it day to day, I've heard from our clients that people feel like they're treading water. They don't have time to fix these issues. They're sort of trapped in a loop of over-clubbed, third-party risk processes. And so I would say, and I think we're going to talk about this a lot, how do you move from that state, which a lot of our clients find themselves in today, to something that's once again, meeting the regulatory needs and doing that in a cost-efficient and process-efficient way.
And to that point, Phil, I actually think this is a great place to pull in some of your experience.
Yeah.
Because we've now gotten to see, certainly we have our practitioner experience. Yours, some of it is directly in financial services. There's how things look to you when you are boots on the ground. And then there's the objectivity that we benefit from now, being familiar with the situation, but being a little bit more removed. Either what types of signs of concern would you maybe recommend people look for, or what benefit is there from being able to take a step back and think about the whole situation from sort of a higher level perspective?
Yeah, I think that, my experience definitely mirrors what Alanna and Andrew were talking about in terms of you put a program in place, and you put a program in place because it's driven by regulatory requirements. And so there's this need, and essentially as an organization, you have to do what the regulators ask for. And in some cases, you may have the regulators sat in your building watching you as you were doing this. So there's this pressure on doing it in spite of any other business conditions or requirements. And so it's natural for the pendulum to go and swing all the way that you just put too many controls in place. And it's hard to then, as you're building it, because your sole focus is on trying to interpret regulatory requirements in a way that means that there's absolutely no way that anybody can poke a hole in something. And so you're making it so stringent, whereas when you take a step back, and I think that's the benefit that Alanna has as well, coming in from an independent kind of consulting perspective, is saying, hang on a minute, do you know that you've gone so far over here that you don't need to, because you've completely over-engineered this process? And yes, you've got through an audit as a result, but there's a lot of wiggle room that you can probably take advantage of, that makes sure that you're doing the right thing, and you're still ultimately trying to identify, mitigate, protect against the right risks. But you're doing it in a much more focused and targeted way. Yeah. And that's definitely something that that I saw and that I was involved in, really, because we built it completely, to the wrong end of the pendulum, and just brought the business down to a halt.
Yeah. Well, and why we do something affects the way that we do it, right? So Alanna, if we take, certainly the ground that we've covered so far, but maybe some of what Phil talked about there, why are you putting risk in place? Well, having regulators breathing down your neck, that's good motivation, but it doesn't necessarily create the kind of culture that is required to successfully operationalize risk management. So if we move away a little bit from just doing what's required, but maybe not going so far that we slow the business down, what does it mean and what does it look like when a financial services firm successfully manages to operationalize the way they address risk?
Yeah, it's certainly a challenge. And I mentioned earlier integrating the procurement process with third-party risk. And I think a lot of it really starts there. And that, the first thing that we always say, start with process, really look at your process, look at all of those connection points within procurement and third-party risk, and set up a process that is actually connected throughout. Because what tends to slow things down quite a bit is when you've got these two separate processes managed by different teams with different expectations, and you're kind of going back and forth, and there's usually a lot of slack and time that's wasted, making things overly complex. So there are certain connection points around the intake process into procurement, and how can we incorporate risk assessment into that? How do we take due diligence results and make sure those are incorporated into the contract? Because ultimately that's what it's all about. How do we look at the suppliers from a 360 point of view? How do we see both the risk picture and their performance picture all in one, and use those results to inform how we source and which suppliers we invite to invent? So really connecting all of those dots is critical, and it helps. And the other piece I would mention very much with what Phil had suggested is looking at it from a risk-based approach, right? The pendulum did swing. A lot of organizations, out of fear and necessity, put very complex programs in place that are one size fits all. Now is the time to kind of step back and look for opportunities to streamline without, of course, compromising compliance. So are there specific use cases we can look at? Maybe it's an amendment that doesn't require, a whole new set of due diligence to be conducted because it's just an extension. Or maybe there's certain categories Andrew mentioned earlier, janitorial, things like that, where you could potentially streamline the risk assessment process to make things a little bit easier for the business.
Yeah.
Can I jump in?
So those are just some examples.
Yeah, I want to ask about the intake process, because I saw that as being a really big driver of ultimately that how you determine risk in the intake should determine the level of risk involvement throughout the rest of the process. Let's say that you're buying something new, or even if there's something that's coming up for contract renewal and you're kind of kicking it back into an intake process for a renegotiation or an addition of a statement of work or something like that. At the intake process, should we be thinking primarily about the inherent risk of what you're buying versus who the suppliers are, to even determine what's the level of further due diligence that we need to do? And is that a good way of kicking out 90% of the suppliers in terms of we don't really need to do a bunch of due diligence from a supplier perspective because the inherent risk of what we buy?
It is. I mean, at the end of the day, what you're buying, it's about the inherent risk of the service and the specific characteristics of what you're buying. And that's what you want to assess in that initial step of your inherent risk assessment, right? That then should determine where you go from there. And ideally, you then have a tailored due diligence process. So, every vendor does not need to receive a 200-question InfoSec survey, right? Only the ones where that's a relevant risk, and maybe it's just a subset of those questions that are really specific to that process. Making those kinds of changes makes the process easier for the business, for procurement, for risk groups, and for the supplier, and helps to decrease cycle time and actually make the process work more efficiently.
Yeah. And Andrew, maybe let me bring you in on this as well.
Sure.
Alanna gave us the example of having multiple different processes within the company, which it happens. Things are homegrown, right? People have slightly different ways of working. But the way that we carry all of this activity out at scale ultimately has to come back to that alignment between the process, the objective, and the systems that are in place to keep everything transparent and consistent. Do you have any specific advice about making sure that there's good alignment, good connection between the intent and the processes that are designed to manage third-party risk and the systems that actually allow disconnected groups of people to all be pulling in the same direction?
Boy, I mean, I could probably talk to this bullet point or this, talking point for about an hour. So thank goodness this is a moderated conversation. So, I'd like to have a broader conversation on this. I think everybody can offer some input, but let me maybe, have some, initial thoughts that I'll throw out here, and we can tease them out if that makes sense. Just as a broad statement, whether you are implementing a new source to pay process or you have one that's existing and you have a TPRM stack and an S2P stack of processes, especially in financial services, I have seen programs from a scoping perspective not do what Alanna talked to, which was revisit your process, look at opportunities to connect and embed. They'll do things, you might hear phrases like, this is a lift and shift, or this is a like for like. And what that's attempting to do is take the processes as they exist today and just put them into one new piece of technology. And often that type of approach ends up increasing your overall cost of ownership. It's a more expensive approach, and you don't actually improve the experience for your boots on the ground folks. So I just want to reiterate this point. I think it's super critical that before you even start thinking about the technology, you do need to think about the process. And once you've identified what your process is, you're going to be able to identify some spots today that are largely manual, where you have a lot of duplication of effort. And those are homes where technology are good conduits to bring your teams together. And I like to direct our clients to focus on kind of three core areas. The first is, from an intake perspective, start the process and gather all of the information you need in one spot and have that spot be your central aggregator of information to give you visibility from the very start of the process to the end. And not only are you going to be gathering as part of an intake information that's relevant for just procurement, but also information about the program, finance, budget information, and an initial, I don't know if Alanna used the word, but, a sort of a triage process that helps you right size all of the follow-on third-party risk activities. Is this going to go down a happy path? We've pre-rated a series of categories of goods or services. We believe they're low risk. We can fast track this. Or do we have a normal path where this is critical? It's outsourcing. It's a BPO. We need to do the whole shebang. And coupled with that are looking for technologies that are within your current technology stack or that you can acquire that allow for collaboration. We haven't talked about it, but yes, fine, information security is a big one for financial services, but we have legal, privacy, electronic records management, a whole host of stakeholders that have particular inputs and interests, and they do not have line of sight to all of the other moving pieces. And so this is where technology can bring that information and people together to give full 360 visibility across the process. And the last thing I'll note, and I love for folks to jump in, I'm a bit of a supplier information management evangelist. Your technologies need to, or you need to think about from a process perspective, what are the data sets that are going to give you good outputs on reporting to help you make good, sound decisions from a strategic perspective or for your category planning. And it all comes back to your supplier record, which means that you need to think about, as part of your process, how you're going to ensure that your supplier records are up to date, current, trusted, and have all of the requisite information that your leadership team needs from a risk, performance, and spend perspective to give you that full view. And so I talked a lot there. So I had a bunch of different points. So I'll throw it back to the team. But from an advice perspective, those are three areas of focus that I think I see successful clients focus on when, at the completion of their programs, and where technology can close the gaps on some of the pain points that exist in a lot of processes today.
Can I just ask a question on the supplier information record? Do you find that the best practice or the more mature teams are actually grabbing data externally as well that they can bring into the record and then making It's almost like the technology is doing some of the decision making for you based on the information that's coming from outside to determine the level of risk and the level of due diligence. In addition, that is required on a manual basis or a more manual basis for which suppliers.
Yeah, absolutely. I think, that's going a couple of levels deeper on the conversation. But I think the overall point is that there are multiple inputs that, come into a supplier record from external risk sources, from your internal teams, from suppliers, that you're collaborating with, from other source systems within your organization that need a place to come in and aggregate to enable your third-party risk management programs or your S2P tools to help automate or drive alerts, notifications, or sort of schedule workflows to take some of those manual emails and phone calls that you would normally be doing today and automate them in a way that frees up the time of your teams to focus on the actual important stuff of assessing risks and making recommendations.
Kelly, I have a question for Alanna, but I want to hold off a minute in case you have any more questions too.
No, you should go ahead.
Alanna, I have a question because Andrew talked about all the different stakeholder groups. And that's somewhat the elephant in the room that we haven't talked about, I think, is there's so many different expectations from different stakeholder groups that almost, at least this is my experience, each stakeholder group believes that their part of the risk management, risk identification process is the most important. And so they all come and they all want 100 questions to be asked. And then you multiply that by 5, 6, 7 different stakeholders. And suddenly you've got something that's really unwieldy. How do you kind of manage that balance between each one of the stakeholders, like having the opportunity to ask enough information to help them make decisions versus asking too much information?
Yeah, absolutely. So this kind of goes back to the role of procurement that we talked about before, right? This is where procurement can really play that leader role, collaboration leader role, facilitator role. It's really, really important to have cross-functional representation and ultimately developing the right process, right? You've got to have participation from all the right parties to make sure that you are capturing the right information. But you also have to distill it down, and you also have to balance that against, the business needs and the criticality. So what information do you need at what instances, and what information do you need at what point in the process? Those are kind of important questions that a central facilitator can ask as they try to streamline the process, right? And that kind of goes back to tailoring your information collection to the specific characteristics. And it's always a battle. I've seen this play out quite a bit. It's a bit of a negotiation, but ultimately it gets you to a place that's, a little bit more streamlined and, again, faster and leaner, which is really what we're after.
How do you find that where the accountability, I was going to ask this question all the way when we were talking about the role of procurement, but procurement has this responsibility, and we take this responsibility to be the facilitator. But ultimately, where's the accountability for third-party risk management? Do you typically see with the companies that you work for? Is it a different group that's a TPRM group? Is it procurement? Is there really no owner, but everyone's responsible? Each stakeholder group's responsible for their own bit. What do you typically see?
Typically, there is a central third-party risk management function, and they're focused a little bit more on, bringing in the right risks, pulling it all together, making sure that the program is compliant with regulatory requirements. The business owns risk. That's kind of non-negotiable, right? Yeah. Just because procurement plays a facilitator role does not mean that they're suddenly the owner of the risk, right? The business that kind of brings on that exposure for the organization is ultimately responsible. But procurement oftentimes can help actually put a process in place and bring everybody together and kind of put that operating model in place, if you will, to define the right roles and responsibilities and to define the sequence of events and what needs to happen in very close collaboration with third-party risk management. I do think it's quite often that organizations are asking that same question: who ultimately owns this? Because you know, there's so many process participants, and no one necessarily wants to take this on, right?
It's easy to leave it to somebody else, isn't it?
That's right. That's right. But ultimately, having a cross-functional team that both puts the program in place and monitors it on an ongoing basis, like Andrew mentioned before, that's really, really important to continue to stay current and evolve the program. I mean, that's really what's critical to make sure that all the needs are represented and balanced.
Kelly.
Sure. And you know, it's interesting. One of the things that we haven't discussed, this is probably a record getting this far into a procurement-based conversation and not talking about savings or cost optimization. We've discussed a number of different pendulum swings today, and I think risk versus cost can come into that as well. Is there a safe way that procurement can pursue savings without either creating undue risk or obscuring decision makers' ability to understand the relative risk of decisions? Andrew, maybe let me come to you on this. You know, how do we balance the desire to help the organization make the most of the resources that they're spending without doing it in such a way that they actually create risk rather than helping manage it?
Yeah, you know, certainly it's the million-dollar question. And you know, ostensibly, we sort of opened this conversation with talking about, you know, cost optimization or cost saving. So I think, you know, Alanna can certainly speak to this as well. But the reality is that an organization needs to invest, especially financial services based on the regulatory requirements, needs to invest in people, process, and technology to stand up their programs and monitor it. So there is a floor in terms of how much you have to spend. Where there's opportunity for cost optimization is taking a look at the processes that you have today and the technology, and you know, where there may be opportunities to either generate sort of brown dollar savings. So let's think efficiency opportunity, freeing up FTE and headcount to be redeployed or work on more strategic initiatives. But also, when we talk about that pendulum swinging too far the other way, there certainly is potential for procurement organizations to be leaving money on the table if third-party risk programs unduly delay a negotiation process. You might be leaving savings on the table. There might be a reduced ROI from not being able to get a good or service deployed quickly. It could be a competitive advantage issue. And so ultimately, from my perspective, I don't normally like to save it as a cost savings opportunity. I like to think about it as a process efficiency play where you can invest in people, process, and technology to walk that razor's edge around not introducing new risk. And I think the reality of the situation is that ultimately, Alanna noted that the risk owner is ultimately the business, and a lot of risk organizations do not always stay in lockstep with what the risk appetite is for for their given business partner. And so as a result, the business may be willing to accept more risk in lieu of speed. So our minimum that we need to do is meet our regulatory requirements. But you know, there is opportunity for improving our speed if we only focus on those three critical risk areas that I identified earlier, which, if I remember the order, it was supply chain, information security, and regulatory risk. You know, perhaps you might leave some off the table for some medium or higher risk suppliers. So I know that I sort of danced around that answer a little bit, but I'll maybe pass the baton back to you guys. But that's generally how I like to frame that conversation.
Well, and Alanna, to that point about framing, certainly procurement doesn't want to go into one of these conversations and right up front say, okay, let's talk about how much savings we're going to get. Is there a framing, a positioning, a language that procurement can use to broach these issues where we're managing the balance between risk management and mitigation and also cost optimization that maybe creates a more open space for people to discuss, well, really, what are the priorities? What are the concerns? And where do we ultimately want this decision to fall on the continuum?
Yeah, absolutely. I think that there has to be a recognition that you're kind of trying to balance the ultimate goal of cost savings with kind of operational effectiveness and compliance, right? And I think what's helped is in recent years, procurement has played a much bigger role in organizations than just driving savings. It's become kind of more evolved and adding value to the business. I mean, Andrew mentioned competitive advantage and things like that. That's actually, we're seeing more and more of that. And we're seeing more and more conversations talking about how do we enable the business to drive revenue faster, right? How do we increase our role in that process? Yeah. And so when you're able to kind of drive those conversations, I think that it's, and you're able to demonstrate that value beyond, you know, saving X number of dollars. It really creates a broader forum for the discussion. And then, you know, yes, you do have to continue to balance risk. But again, let's look at our risk-based approaches. Let's look at ways to streamline. Let's figure out how to at least control costs of those risk programs in order to kind of find that balance for all of those competing objectives.
And that's an exciting conversation for procurement to be having, right? To be talking about driving revenue growth, to be understanding the role that risk plays in so many of the things that not only we do, but that we then enable the business to go and do. And so, Andrew, maybe if I can slip in just one more question here. To what extent, we've talked a little bit about platforms through this conversation, but to what extent can those platforms, can procurement technology be sort of the center of information, the sort of transparency that can drive decision-making and keep everybody on the same page? We're trying to do all of these things at the same time, be efficient, be effective, and not slow the business down. To what extent are we really needing to focus on using the technology that we have or purpose-built technology to enable third-party risk management at scale?
Yeah, I think it's a great question. And I think technology is, you use the word scale, it's the enabler for scale through digitization and automation of processes. So, for example, when we think about, you know, your procurement organization and folks who need to approach or engage with procurement, having one place from a technology perspective for business requesters and folks to go to request goods or services, to identify a need, and have full visibility of that throughout the process is integral. And that is going to be typically part of that S2P procurement, typically procurement-owned suite. From a scalability perspective, two things come to mind. So first, when you invest in a technology platform, there are a few things that I think enable scalability. One is how flexible that or agile that particular tool is, the ability to easily consume data externally or send that data externally without, you know, significant dollars attached to it from a systems implementer or the vendor themselves is critical. And as well, being able to, you know, work and be agile from an internal process perspective. One of the reasons it takes so long for folks to adjust or change their processes today is that they are not in a tool. In some cases, you know, in the FinServ space, they're very large Excel spreadsheets that, you know, can't be changed on a regular basis. So having technology that allows you to make small, medium, and large size change requests on your own, in an agile and adaptable way is critical for scalability as well. And then the third piece is investing in tools that allow you to automate and digitize your processes where it makes sense to do so. Yeah. Every year, as part of the maintenance and compliance piece of a particular engagement, do I need somebody to manually send an email to request a SOC 2 report and a variety of artifacts? Or can these questionnaires and can a lot of the compliance components be automated for me, freeing up my time to focus on the increased volume coming through the tool or other things? And so I hope I answered your question, but I think technology is critical to scale these programs in a nutshell.
Absolutely.
And so I know that we're running up against the time that we'd set ourselves for today's conversation, but I do have one final question, Alanna, and this is, as procurement professionals and procurement leaders, we may be sitting using and leveraging a third-party risk management program that we believe is not fit for purpose because of all the feedback we're getting, because we're seeing accelerated cycle times, because we're feeling like there's a lot more bureaucracy in the process. My question is, like, as a procurement leader, what can we do, or who do we need to go and talk to start a conversation around maybe we should think about optimizing this program because it's not doing what we think or what we need it to do?
Yeah, I mean, I think it's really important to kind of have that recognition when it's appropriate, right? And really starting to understand the issue, right? So voice of the customer is something Andrew mentioned, and that's really, really important. So it's really understanding from your stakeholders what's working, what's not working, to help identify where the challenges and issues may be. And then it's really potentially a time to step back and kind of look at it from the different perspectives. Look at your process, look at your overall operating model, and what are the roles and responsibilities, who's involved, how are we doing it, what does my technology look like, what are my data needs, and are they being supported in the right way? Do I have the right governance over the process? Do I have the right controls? And really kind of doing that that type of an assessment to help uncover specific challenges that may need to be addressed to then be able to develop, a plan to get those addressed.
Yeah. So going with data and going with, feedback from users and, something a little concrete to start building a business case around change sounds like the way to go. Well, Alanna and Andrew, I want to thank you so much for joining us and sharing with us, just a little fraction of your experience in the third-party risk management space and procurement's role in it, and how can we look at really optimizing those programs that, for the most part, are in place within financial services companies right now, but oftentimes there's a lot of opportunity for both increasing their effectiveness and increasing the user experience. So thank you very much. And I want to thank everybody who joined us today, listened into the conversation, and was a part of the AOP Live. So for anybody who is interested in any more events from Art of Procurement, you can always go to artofprocurement.com/calendar just for details. And we have all of our planned events right there. Until next time, Andrew, Alanna, thank you so much for joining us.
Thank you.
Thank you.
Have a great day.
Thank you.